what I have to tell you has very little to do with Africa, and I don't presume in any way that the Asia experience automatically transposes to this environment. And it will be for the people in this room to decide, what, if anything, to take from that experience and how to adapt it. But I think you will see from the Asia experience that fintech has taken hold in a fundamental way. And I think there are many lessons that can be learned from that. Let me begin. And you might know some of these quotes, but it's probably worth just standing back and at the global level and looking at the promise that fintech has held. And I like to go back to a quote from Bill Gates from 1994, where he sort of said, almost off the cuff, that we need banking, but we don't need banks anymore. And what he was really telling us is that there's a new set of technologies that allow us to essentially overhaul and even bypass the traditional institutional structure, the processes, and the legacy technologies that they were based upon. And there are many other quotes, I won't go through them all, but a recent one from Jamie Dimon is that Silicon Valley is coming. A friend of mine, Anthony Jenkins, who used to be the chief executive of Barclays and now runs a very interesting fintech that we are an investor in that is doing exactly what our previous speaker explained, which is creating a global SaaS platform so that you can set up a bank anywhere, anytime. And Anthony has talked about the Uber moment for banking or for finance. In other words, the way in which the traditional architecture and institutional structure, again, can be overturned by technology. Many others have made similar comments, including the opportunity for fintech and for digital technology to play a transformative role in the developing world, and in particular in areas such as financial inclusion and sustainability. Fintech is not just a buzzword, it's a reality and has attracted massive amounts of capital. On the left-hand side of the chart that I'm showing, I hope you can see it on the two screens, what I've shown are two things. Firstly, on the left-hand side, the capital from venture capital globally that's been attracted to venture capital. And you can see if you go back to 2012 or 13, it was $6 billion, still quite a lot of money by venture capital terms. Last year, it was $43 billion. So this is a major global phenomenon. And then if you look then at investment in more mature companies, particularly private equity and M&A activity involving fintechs, we see much, much bigger numbers again. And indeed, last year, the total being 132. So we're talking about almost $180 billion of investment in 2018 in financial technology and in new business models that revolutionize finance. Where is all of that activity happening? Well, let's just look at the VC portion of it, the 43. You can see from 2013 to 2018 the growth that we just talked about. And what we can see, however, is that what began as a US phenomenon has now become a global phenomenon. And the two markets that dominate today are the US and China. China has had its own fintech revolution. I will talk about that. It's probably the most profound of any country in the world, and I think it will be interesting to the people in this room. But we've also seen substantial growth in Europe. Europe had its first fintech unicorn 2 years ago, and it's beginning in the rest of the world, certainly in Asia, in no short measure through the sponsorship of regulators such as the Monetary Authority of Singapore. And we've also seen the rise of really significant companies. So the first on the list there is Ant Financial. So they are the people that are responsible for Alipay. And they raised $14 billion just last year at a $150 billion valuation. And this is not even a listed company. JD Finance is another company from China. They raised $2 billion at a $20 billion valuation. one of the companies created by Ping An, the company I work for, Lufax, which is the largest digital wealth management platform in the world, we raised just $1.3 billion, but at a valuation of $39.5 billion last year. So it's quite interesting that we see the emergence of really significant players from a valuation perspective. And they're not just in China. You can see that on the top 5 here, one is a UK lending and insurance platform, and the last one, Oscar, which we're an investor in as well, by the way, is a very interesting new generation health insurance platform trying to deal with the chronic and crippling cost of healthcare services in the United States using digital technologies. There are over 7,500 fintechs in the world today. There are 5 what we call decacorns, 5 companies that have a valuation of more than $10 billion, and there are 48 companies with valuations of more than $1 billion. And the process of entrepreneurship, of building these businesses, inevitably means many people at the bottom of the pyramid don't make it to the top. That's the law of the law of business, the law of entrepreneurship. But globally, it is a very vibrant sector indeed, and I think we'll see many players that are in the bottom few tiers of this pyramid rising to the top around the world. And if we think about the areas covered now by fintech, I think if I can ask them to put the slide up, thank you. The areas covered by fintech, it really is now the whole spectrum of finance. There is almost no area that has been untouched. In payments, we talked earlier about M-Pesa here, but of course the payment revolution in China, where cash basically doesn't exist in the society anymore. If you buy flowers in the street, or a newspaper, if you buy newspapers anymore, or if you pay somebody for lunch money, even the most trivial payment is done electronically. In retail lending and retail account management, we've seen very significant progress. Likewise in wealth management. In fact, these 3 first categories are the dominant areas of focus for fintech thus far: payments, wealth management, and lending. Insurance has been slower to take off, but it's beginning. I just mentioned Oscar as one example, but there are many others around the world. And behind insurance, I would say SME and corporate banking, and then capital markets. And then down the bottom, the writing is very hard to read on this small screen, but there's a lot of very important enabling technologies providing the next generation infrastructure. So all of these are attracting capital, and they're all growing. The way we think of fintech is almost in 2 stages. The first generation of fintech going back 7, 8, 9, 10 years, even some examples that go back, like PayPal, for example, going back 15, almost 20 years, really were direct-to-consumer models. And I remember when I used to work at Citigroup, we would go with our management group to visit startup companies in Silicon Valley, and they'd sit across the table and they'd say to us, "We're really here to take you out of business." A few years later, we'd evolved to something we can call FinTech 2. And it proves that it's not that easy to take the legacy banks out of business. There are certain areas like payments, like wealth, like lending, where it is feasible to build standalone direct-to-consumer models. But there's an enormous opportunity for FinTech to be an enabler for legacy financial institutions. And we see many important companies emerging in this space. And I'll talk about some of that as we go through today. Our previous speaker spoke about some of the driving technologies, and what I have to say is broadly in agreement. We see cloud as fundamental. It is fundamental to the new generation of fintech startups, but it's going to be even more fundamental to the legacy industry. And it is a fact that regulators around the world have really yet to reach an adequate and sufficiently sophisticated and certainly a common understanding of what the cloud opportunity and imperative represents. And the facts are that cloud can deliver more secure, more reliable services than any on-premise facility can, at a fraction of the cost. It has to be part of the future here and everywhere else in the world. Biometrics are very important because they allow us to access, to reach out to consumers with integrity, with security. Our own company is very active in all of these areas, but we build our own facial recognition. We do our own voice print recognition. Automation will be a dominant theme across all business sectors for the next few decades. AI is transforming many areas of decision making. One example would be the technology of voice robots. In our own company, we now have voice robots that can carry on conversations of 5 to 7 minutes, and the person on the other end of the line really has no idea they're talking to a computer. The accents are localized, the timing of the voice is matched to your timing, etc. So these are very powerful technologies emerging. IoT, as 5G, even 4G, but as 5G takes over with many times the upload and download speed that we have today, pretty much everything is going to be connected, is going to be monitorable. It'll be possible to create a digital twin of almost any activity and then build intelligence into that that allows it to be run more effectively. And tokenization, blockchain is probably the most common example, but the idea of secure tokens that represent almost any asset or any contractual relationship, this is a reality as well. So these are all at varying degrees of maturity, but they're all going to be profoundly transformational to our industry and to many others. Who's driving in the markets where we've seen really powerful transformations? I'd say the US in particular and in China would be the two that stand out the most. Who's driving change? Well, there are three types of entities driving change. In the first instance, it's the group down at the bottom. It's fintechs, people starting new businesses who are challenging a status quo. And that can either be direct to consumer or it can be enabling. Secondly, it's very clear that the legacy industry has begun to get the message, but very few traditional banks or insurance companies could claim to be technology leaders at this point in time. But nevertheless, most have funds, most have some kind of innovation group, most are really thinking hard about how to digitize their entire business. It's just a long, complicated process. And then you have the tech giants. And these are players, I would think of players like Amazon, like Google, players like Ali, Tencent, who have the ability to move into finance on a massive scale because of the size of their client base and the depth of interaction that they have with clients. So it really is these three elements that are coming together to create this emerging world. And this will be very important when I talk about the China example. The benefits, I think we've already heard about the benefits of inclusion. In fact, these are selective statistics, but just taking a few places. In China, if you take third-party transfers, e-wallets are ubiquitous in China, it's almost 100%. But for third-party transfers between institutions, there's already 50% penetration. And we have very significant penetration of online wealth management, in particular online money market accounts in China, and of course very, very broad penetration today, but growing very rapidly of online lending. Secondly, the costs of fintech. It costs a fraction, the magic of mobile, the magic of virtually zero marginal cost for a new transaction, is that when you compare it to the old way, the bank branch, we're talking about typically an 80% plus reduction in unit costs. So it's a compelling economic case. And also a driver of economic growth. This is the China example. China, over the last 5 years, from 2012 to 18, has experienced 8% GDP growth. Their consumption growth has been about 9%. Within consumption, however, e-commerce has been 33%, and within e-commerce and beyond e-commerce, the growth in online payments has been 72%. This by itself doesn't establish a causal relationship, but with other factors that we know about, we know that the online payments and the explosion in e-commerce is driving GDP for this country. There's no question about that, and is helping China navigate its transformation to being a consumer economy from an industrial economy. And you can see here, taking China as an example, just what a success story it has been from a fintech perspective. So, of course, China is a small economy than the United States. It's the second largest economy in the world, just under $14 trillion of GDP. In terms of payment values on mobiles, you can see that it has 400 times that of the United States. In terms of e-commerce transaction values, it's 2.5 times the United States. In terms of online wealth management AUMs, it's actually behind the United States. Both sectors are very successful. And it's substantially larger in terms of online lending volume. What has really made China successful? I think there's a few factors that are important. Smartphone penetration has been fundamental. And so in parts of the world that are lagging, as that smartphone penetration happens and as the technology moves up the curve from 3 to 4 to 5G, that is a fundamental condition for transformation. I think that the growth of e-commerce has been fundamental as well. And in China's case, the e-commerce giants, most notably Alibaba, were able to leapfrog all traditional channels of retail and dominate the sector. But there's no question that has created a fundamental set of conditions. I've called it here late mover advantage, but being able to watch what the rest of the world did is a huge advantage. Not having to make the same experiments and make the same mistakes. It doesn't mean you're going to get it right every time, but you can learn a lot from people who've already been there. I think the idea that technology has the opportunity to transform lives as a concept, that is well entrenched in a place like China. People understand that because they have seen their lives transformed by technology, and that drives adoption. And I think the infrastructure is helpful. When you have, in China's particular case, we had very high debit card infrastructure. Almost everybody had a bank account and a debit card. So being able to build on that was very helpful. So in each market, there might be unique things that are part of the existing landscape that you can build on that become powerful enablers. But in China's case, it's these 5 things working together. Which brings us to Ping An. And I think it's worth just spending a second, since I'm here, explaining to you what Ping An is. Ping An started as an insurance company in China in the P&C business, became a life insurance company. It ended up becoming the largest insurance company in the world. The market cap of the company today is about $240 billion, and I think that's roughly double the next largest insurance company in the world. But insurance is just one part of Ping An. It's a very important part, but one thing that Ping An did is diversify its range of financial services, firstly. And then, about 10 years ago, there was a decision by the chairman and the founder of the company, Peter Ma, to pivot to being a technology-first company. And the first thing he did was to convert the company to cloud. So we're the only large financial institution that runs 100% on cloud. Every single piece of technology we build sits on a commodity platform, is modular, and is fungible to any other part of our business. So that's an enormous advantage. And then digitizing many of the fundamental processes that drive the company. And in the process of doing that, figuring out that there are new business models that couldn't fit within the traditional architecture of our business. So Ping An created Lufax, which is the largest digital wealth platform in the world. We created the largest online digital lender in China, non-bank lender in China. We created a business called OneConnect, which takes pretty much any of our technologies and makes them available to other financial institutions. So we have 500 banks as our clients in China, and we have about 2,000 non-bank financial institutions. So we can now bring this overseas, which we're doing. We've opened an office in Singapore, and we're bringing this to banks in emerging markets, and we can give them AI facial recognition. We can give them voice recognition. We can give them voice robot technology. that you can't even buy from global vendors. So it's really a unique thing.